Hey, welcome back to another episode of Forest Tech Magazine. It's your host, Lewis. Hope everybody's doing well. Happy New Year to you. Today is Monday, January 7th, 2019. I want to say big up to everyone that had the opportunity to chat with us. Mr. Zero Fear, how you doing, my friend? I haven't heard from you in a minute. Seeing your message right here, my friend. Get a chance to chat back in with us. Yeah. Before we get too far into the episode today, we want to go ahead and put out the disclaimer. Disclaimer goes a little something like this. Any and all information given to you by Forest Tech Magazine should be considered for the purposes of education and entertainment only. Um, any information that you, or I'm sorry, just got distracted by the chat. Any and all information given to you by Forest or shared with you by Forest Tech Magazine should be considered for educational information purposes only. If you're in need of financial advice, our suggestion to you would be to seek out the assistance of a licensed, competent advisor. Mr. Zero Fear says, what are we going to be viewing today? Well, my friend, today we're going to still be looking at some of these Great Britain pound setups, but we're also going to be looking at some Aussie dollar and some U.S. Canadian dollar setups as well. If you haven't already had opportunity to look at some of my other videos, we're doing a live account. And so what we're trying to do is grow that live account. Start out with $360. Went in last week, had a rough last week. Oh my goodness, it was rough. But that's okay. Today is going to be, or this week, rather, it's going to be the rebound week. We got some good trades on the books that we're going to be looking at. Some good setups that we think is going to unfold here shortly. But we need for it to play out for at least the next 24 to 48 hours before we take a position into it. So we're going to talk about those. And hopefully, we're going to be able to get some setups in play that should be able to make us some money. So anyway, let's go ahead and get right on into that. Let's go ahead and get right on into this, my friends. Sorry, guys, I'm a little off on my game today, man. I don't know why. I guess it's coming back from the holidays or whatever, but just kind of, I don't know, just a little tired. But anyway, so let's start off, and I don't want to start off with the Great Britain pound, Aussie dollar. I want to start off with the Great Britain pound, New Zealand dollar. This is the hour chart. What you're gonna notice right now, it looks like with these pairs, some of these pairs is a little bit of sideways movement. Remember what I told you a little while ago? Towards the beginning of the year, currency pairs typically start to make their move that they're gonna make for at least the first quarter, right? So if you get something that's in a downward trending position, it's going to trend downward for the first quarter. If something's going up, if it's going up, it's going to go up for the first quarter. Right now, it's moving sideways. I think a big part of this just happens to be because there's going to be a decision that's going to be made about the Great Britain pound within the next 2 weeks or so. I believe it is. It's coming up. They're doing another vote. I think that at that time, once that vote occurs, you may start to see a little bit more of a directional swing within this pair. Right now, we got the fibs in place on this particular pair. I mean, the fibs have worked out for, several trades for us on this particular pair. One, two, yeah, for over several trades. Unfortunately, though, right now we kind of hit a stalling. Right, it was kind of stalled out, and so we're just kind of moving sideways. Another big factor right now in the market is kind of weighing in. Is of course, we got the government shutdown over in the U.S. There's going to be some big news, hopefully, out within the next day or so about the trade agreement with China. So hopefully we're going to make some progress with the tariffs, and if we're able to do that, then we can expect some. We'll expect to do some good trades there. You said, Mr. Zero Fear said, let's do the Great Britain pound US dollar first, please. All right, my man. Let's start there. Hold on a second. We'll go over here for you, my friend. All right, so Great Britain pound, US dollar. Unless you were under a rock for the last week or so, We saw last week it had a huge spike down and then it proceeded to move back up. I put the fibs on that spike down just to kind of see where we were at. And as you can see, right, the fibs made a completion. Here's your A, here's your B, your C pull back, and then here goes the D, right? And of course, price went straight up to our D, hit the target. And now what we're doing is we can go ahead and we can put a new set of fibs on here. And we can make our A, let me see, here. And so now we could do this whole thing over again, right? So now we got a new A, we got a new B, and so essentially what we're doing is waiting for our C, right? And this could be the C here, but I would like to really kind of see more of a pullback, but it could be, right? But this would be our D extension here. Now, right? That's playing it off of the 1 hour chart. Let's go look at the daily chart and just kind of see if we can see what the overall direction of the Great Britain pound US dollar. So we notice that the Great Britain pound US dollar overall direction is a downward trend, right? And so when you start looking at a situation like this right here, right, where you got like a you got an upward trend or upward possibility on a smaller time frame, but on an overall larger time frame, it's saying that this thing is still moving down. You run into one of those things where, what do I trust? What should I necessarily be doing? And I would tell you, always err on the side of caution in these particular places, right? It looks good because it's a strong downward move, but then there's a, you know, that sharp move up, right? So it lets you know that the bulls, the buyers are coming in to press up on this particular pair. The problem is, you know, how strong is that push up going to be? Now, that's not to say that, let's go out here. That's not to say that, you know, it couldn't move up. It's just to say that if you're going to buy into this market, just use a lot of caution going into it. You know, that's essentially what we're trying to say. Because if you look at the fibs on the daily, right, there should be a completion. The D extension is down to 1.20781, right? And I don't know that one. Let's see. What I'm doing right now is I'm going back in and I'm just looking at some support and resistance areas here. I would tell you, use caution. If you're going to be in this one right here, use caution. A couple of weeks ago, we were trading the heck out of this pair. We were actually buying it on its way up. Made a lot of good money on that one. Just because we're at the beginning of the year, and I know that there's some, you know, there's some information out there that's going to be, you know, passed around as far as with that vote that's going to be coming down over, you know, next couple of days or couple of weeks or whatever. I would just say be extremely cautious with this particular pair because there's just a lot of factors. And I would say if you're going to trade this right here, make sure you definitely use your trade, you know, use your stop losses, right? And I never want to tell you to do a tight stop loss just because, you know, if it gets too tight, sometimes you can just lose money just based off of it being so tight. But there is a, if you're not worried about this particular pair, I mean, there's a lot that I know it sounds like I'm kind of rambling here. It's probably because I am. I'm kind of on the fence on this one right here. Just because I've seen what it can do and I've seen what it has done in the past. And what I don't want is for anybody to go out here and to, you know, take unnecessary risks on a currency pair and lose money trading. You know, I always want you to trade very cautious, trade very scared, you know, and trade like your life depends on it, because actually, you know what, your life does depend on it, because if you don't make money, then you're gonna be you're gonna have to get a job, you're gonna have to do whatever. Um, and I don't want to see that. I want to see you be successful with it. So I would say, yeah, the fibs, the fibs give way, and it says that hey, you can on a short time frame. On a short time frame, it does say that yeah, you know what, this thing you can buy into it. On a longer term time frame, however, it's showing that it's going down. If that makes sense for you, right? So for me personally, getting in here on a short time frame is not a bad idea, not bad, right? Just use a lot of caution when you do it, right? So let's just look at this. Let's just look at this trade. Let's just look at this setup real quick and see how this particular setup would go down if it's something that we do decide to trade, right? Let's see here. All right. All right, couple things. One, A, B, C, right? D extension, right? Hit the target, great. New A, new B. Now we're looking for the C. Well, how do we find the C? Well, the way we find the C is that we're looking for a pullback that's going to cross over to the buy side. So if you look at this downward trend line right here, and this is the reason why I put this downward trend line here on this chart, is that anytime price is on this backside, that's telling us that we should be this is the sell zone. We should be looking at selling anytime price is on this backside. Anytime price crosses over that trend line, right? They're letting us know that we should be looking for buying opportunities. Now we can get into buying opportunities. So same thing, right? We got an A, we got a B. Now we're going to be looking for a C. So we're going to have to draw a trend line, right? Because price, after it makes a move, it should be pulling back, theoretically, right? Now, how far does it pull back or how long does it pull back? That's not up for us to determine. The market decides that. And as you can see right here, had a pretty short pullback, right? Came up to, 2.36, didn't even touch all the way. Pretty short pullback before price skyrocketed back up, right? It's a lot of momentum that pushed price up at that point. Don't know if we're actually working with that same amount of momentum right now, right? But if you look right here, for the layperson, they could come in and just say, hey, from here to here. I'm sorry, you can't see me draw that. Let me do this right here. For the layperson, they could just come in and just manually draw in a trend line, right? And say, well, hey, you know what? Price pulled back here, right? And then it went up. So everything on this side right here is letting me know I was in the sell zone because price was going down, and now it's pulled back up. So now it's in the buy zone, and I should be safe to buy. You could go with that theory. I don't, once again, because I'm so cautious right now, because so much stuff going on in this market, I'd be a little careful about that. Because what I'm looking to do when I trade this market right here, I'm looking to put my stop loss below my A, right? Some people put their stop loss below the C, which would be right here, right? Especially if prices already went above where your B line is at, right? But for me, I'm just one of those guys that like to put my stop loss below the A, right? Because that gives me time for the market to get and kind of work itself out. Because I know a lot of times the market's going to readjust. It might come down to the 3.82. It might come down to the 0.618. Or price might even drop down here to these lower levels, right, before it makes its move up. And if it does, I like the opportunity to be able to adjust my my take profits from up here, from my D from being here to maybe to here to even here. And I had to do this a couple of times with these particular pairs. So what I would say is going to all boil down to your level of comfort and also to the amount of dollars that you're willing to risk inside of your account value. If you feel comfortable going in here right now, it's on the buy side. Price is actually retreating back right now at the moment. So, I mean, I won't buy it when it's dropping, but, maybe wait till next time when it push back up again, and you might be able to find an opportunity to get in there. But that's kind of the way that I'm looking at this particular pair at the moment, right? I'm sorry. Had you on mute. Sorry about that. I just saw your question. You said, Mr. Zero Fear, you said, what's the meaning of bias? Well, bias is just your own personal opinion. Sometimes it can overweight your logic, right? So you see a lot of times, unfortunately, with some traders, they'll go in and they will have this. They'll just be like, it's gonna go up, right? And you say, okay, well, why do you think it's gonna go up? Well, it just is. You know, I'm already into this trade. I got my money in, and I got my stuff locked in. And I just think that it's going to go in. I just feel that it's going to, it's a gut feeling. I just feel like it's going to go in. And against all logic, you can show them a chart that shows that clearly this thing is going to go down, it's getting ready to tank or whatever. Against all logic, they will still say that thing is still going to go up, just because they already got this built-in bias that they believe that this is what's going to happen. And here's the thing: there's nothing wrong with having confidence. There's nothing wrong with having certainty about your belief, right? But what you have to do when you present it, compelling evidence, you should be able to be in a position where you can change your stance based off of evidence that's being introduced to you, right? That's why I like using Fibonacci's, because essentially, if I see price bounce off of the red, I know my extension is going to the red up here, right? So I feel confident with it. But when I start to see price and it pulls back, and originally it was at the red, it goes up for a little bit, and then it comes back down, it goes down to the blue, or down to the green. Now all of a sudden I'm faced with new evidence, right? That says that, hey, you know what? That D extension might not be over here at the red. I might need to go back. I need to readjust, my take profit, and I need to come back to something a little bit lower. And that's what I do, right? Now I could just say, no, my first assessment was right, and it's going up, and I know it is, and blah, blah, blah. And if I do that, I run the risk of missing out on this trade. I run the risk of not making anything, and actually maybe even taking a loss in this trade. So that's the whole thing about the bias. You don't want to be so caught up into your emotions and what you're feeling about something that you're not able to see what's actually happening, right? That's key. So anyway, with this particular trade right here, for the short term, we'll be looking at my target possibly. And I'll be honest with you, for me personally, I wouldn't feel comfortable getting into this thing right now. Me personally, I want to wait like another day or so, just to kind of see how it's going to play out. So maybe another 24, 48 hours. We'll see where price is at that time, and then we'll look at potentially put some order entries in to maybe hit that take profit up here, right? That's it. That's my analysis for the Great Britain pound US dollar. Do you have another one that you want to look at? Just let me know. If not, we're going to jump right on over into the Great Britain pound New Zealand dollar and look at this one. So once again, this particular pair, like I was stating earlier, it appears to be kind of going sideways for right now at the moment. It still hasn't broken below the A, and so anytime you trade in fibs, right, you're still in the game as long as the price doesn't break below your A. If the price breaks below your A, then you're out of the game, right? It's pretty much, this thing is doing a U-turn, and you probably don't want to be into it, or it's crazy right now. You don't want to be into it. As you can see, it's just kind of held steady right there at the right here at the what is that? At the 50, at the 50 mark. Which the 50 mark is not really a fib. That's more like a gain number, but it's incorporated into the whole Fibonacci sequence. But anyway, this is where we're at right now. So it's still in the red. So that still gives us hope that price is gonna push back up here. But right now, it doesn't really have any real direction. I think part of it, like I said before, is just because of what's happening over with the Great Britain pound, them waiting on voting and everything. And then also too, I think a lot of it also may have to do with what's going to happen with this tariff agreement coming out. This tariff agreement, sorry, is coming out with China and the U.S. Supposedly, I think the talks are starting today and tomorrow. And then hopefully by Wednesday or Thursday, we might have some type of solid headline or something that comes out. And once we get that, definitely something that can move the market. So stay tuned for that. um, and and that's definitely going to move like the Australian dollar, which we'll get into that in just a minute because they are one of the biggest trading partners commodity wise with China. Let's go to the next one here. Great Britain pound, Canadian dollar. Whoa, this one right here took a hit too. Let's see here. All right, so boom. This right here is one I was talking about. Like, if it goes below the A, it's pretty much done. And let's see here. Yeah, and as you can see, so here's your A, here's your B, all right, potentially C, right? Price went up all the way up until December 31st, right? It was trying to make it to the A, it was close, right? But then whatever news came out, price begins to push downward, still in the trade, but then after that flash crash, right, boom, went through the A, and so now all of a sudden, that whole upward momentum was gone, just wiped out, right? No more looking up. So then what we did is put on the fibs, looking at downward momentum, right? This is the A, this is the B, right? Looks like C was here. And then what we did is went in and we just kind of put on, listen, if we have the upward trend line, right? So it means anything on this side is going to be buy, anything on this side is going to be sell. Price crossed over into the sell zone. And then what's cool about this particular pair right here that we're looking at right now, these horizontal lines right here are actually support and resistance areas. This particular pair was really fighting to push up through a high area of resistance. So if you look right here over the last several months, right, or weeks, or whatever have you, this right here has been pretty much the high watermark, right? As far as price, right? So price is going up to like 1.71429, yeah, up in this area, right? And it's going as low as 1.6647. So price had a pretty good range where price will go up, it'll go down, go up, it'll go down, go up, it'll go down, go up, go down, right? So kind of coming into this last trade, we kind of knew, that's one of the reasons why we kind of hesitate getting into this last one, was that price was really kind of pushing the upper bound of the of that support and resistance line, right? And we knew that this thing was moving sideways. So the only way for it to really kind of keep pushing up and out of here would mean that all of a sudden now this thing would have to be trending and no longer moving sideways. So that's one of the things that you want to kind of clarify as well, is that when you go into the trades, what is the currency pair doing? Is the currency pair truly trending, or is it range bound, right? Is it just going, moving between the ranges, just fluctuating, right? This pair right here is, like it was, fluctuating for a while. Had a potential to break out, but like it was essentially just fluctuating for a while. And so wasn't really too sure of whether or not it would hit that target, and it didn't, of course, right? Go back here. And so essentially, price made its way down, came back up a little bit, and now it's still kind of pushing its way down, right? It's right here at the support resistance line. This used to be support, now it's turning to resistance for it. And so the question is going to be, over the next couple of days, will price go ahead and hit the de-extension for this move, or will price push back up and then continue a upward trajectory? I don't know. It's a good question, and I think, like I said before, once we get some more information that comes out with Brexit, what's going to happen, I think we're gonna definitely get some clarity within the movement itself as far as which way we should be in on this trade. But just like the Great Britain pound, New Zealand dollar, it's moving sideways right now, right? It's in a holding pattern right now until I think the market gets a little bit more clarity and they find out what is it they exactly want to do. Next one we're going to look at is the Great Britain pound, Japanese yen. I hate trading this pair because it has the Japanese yen, but for those of you who want to trade it, no, it's not wrong. Let me grade these fibs here. Oops. Now, there is a smart tool on here that you can use that automatically draws your Fibonacci's on here for you. I like to sit down here. I like to manually draw them myself. But you know what? For the sake of time, if you want to use the smart tool, use the smart tool, man. It's not wrong using the smart tool. Oh, that's not it. All right. I'm not trying to do that. I'm trying to erase it. All right, here we go. Cool. So, let's look at this overall on a daily chart. Yeah, so I didn't put. So this is pretty much the support area for this particular pair. All right. All right. It's pushed through the support area. It's gone down to the lower level. Question will be now, can it come back? Will it come back? And if so, how? Right? If we look at our trend line, of course, on a daily, we're on the back side, so it says sell. All right? On an hourly, let's see what it looks like. We're on the back side, of course it says sell. Now, this is interesting right here because this little short term right here says buy. So now you come to the question of, well, what do I do? Do I buy or do I sell, right? And this is where a lot of people get in trouble, and this is where a lot of trades go south, right? Because now you got some conflicting information on the screen, right? It's because on the daily chart, you got the price going down. On the hourly chart, overall, you got it going down, but you got this little slither right here that's saying that, hey, you know what? This could be an actual potential buy. So you say, well, what do I do? This price is like it's going up, right? Well, what do you do? Well, I would probably say stay out of it. But if you did want to go in it, you go into it looking at some things specifically, right? One thing that I would look at specifically is that this right here used to be support, right? And I would probably think that now it's going to probably be resistance, right? And then the other thing I would be looking at is that if this trend line is going down and this trend line is meeting at my support, which is going to now potentially be resistance, this tells me definitely that even if this thing does go up, or if it does continue to go up, it's probably only going to go up somewhere up and around here. It's not going to go up that much farther, right? So I'd be looking to take my profit somewhere up in here, right, if I was going to do this. So the other thing I would look at doing, if I was going to do this, and I'm not saying that I am, but if I was, you come over here, you put your smart fibs on, right? Boom, 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 bam. And what do you know? Lo and behold, what happens, right? This is just the smart fibs, right? And it's telling us the exact same thing. As you can see right here, if this is, we don't know how far this is going to pull out to. Right now, it still hasn't given us a buy signal, right? But right now, here goes our A, here goes our B. We're looking for the C, right? And if we're anticipating that the C is going to be somewhere around here, you can see where the D extension is. And D extension did what? It lined up perfectly with our resistance area, right? So if I was going to go into this one right here, a couple things that I would do is, one, I would wait for price to cross above this downward trend line. And you say, well, where's that downward trend line at, Lewis? Well, here it is right here. Right, see, price is moving down. So I'll wait for price to push up above there, right? Get on the buy side of things, right? And then once it gets on the buy side of things, I put my take profit right here. Can't really see it going much higher than that. Ooh, excuse me, can't really see it going much higher than that. just given the overall low energy amount in this market. Typically, this type of a pullback, you would kind of consider it to be like a Gartley or something like that, right? So essentially what's happening is price made a big move down. It's taking a breather from that big move down because it's pulling back up a little bit, pulls back up to here, then proceeds to go back down again. That would be my assessment of it. Some people agree, some people might not agree, I don't know, but that's the way I look at it. But right now, there's not a buy signal in this market just yet, so I will still just kind of sit on my hands, not do anything, and wait till I got one. And if if this is one that I decide I want to trade, yeah, I'll be looking for my take profit right here. Makes sense. Hopefully. All right. Now let's look at the next one, which is going to be the Great Brent Pound, IZ dollar. Yeah, that looks like crap, right? This thing dropped out a long time ago. But now, the cool thing about this one right here, right, if you notice, right, is that price is still within. Actually, hold on a second. The cool thing about this one is it actually hits price target, right? We just haven't put another one up, right? So here goes the D extension. This is your A, this is your B. Came all the way back down to the C. Took it a while to get there, but it did get to the the D, right? Boom, it made it. And then price proceeded to head back down, right? So one thing that you could do, and you can already kind of tell that it's then adversely affected it because it's not even relevant anymore. But yeah, price has already crossed back below the A, so this right here is not even a relevant fib anymore. So there's no need to put that on there. You don't need to print that one. You can, however, look at this downward momentum, all right? And once again, kind of get an idea as far as where price should be at and what it should be doing. This particular pair, here goes your A, here goes your B. Question is, where is your C? Could you consider this right here the C, and then it's ready to push back to the D, possibly. Just kind of keep in mind though, you have this support / resistance right here that could act as support, and if price hit this level, it push back up. Right now, you've been seeing some movements in the Aussie dollar, and once again, I think it's just because there's a lot of anticipation that it will get a deal worked out with China and the U.S. I think everybody's hopeful for that. I think it's going to be good for both economies if they can do it. But if they can't, then it's definitely going to be disastrous for both economies, especially I think China more so than U.S., but I think it's a deal that needs to get done. Okay. So for this right here, my opinions on this right here, personally, I would probably stay out of this one too. I mean, I'm not really overly excited about the Great Brent Pound pairs right now. I think there's a lot of noise in it right now, and just got to be careful. And if you're gonna, because those of you who know me, I like to trade with, like I said, my stop loss over here by the A. And when we look at the risk to reward ratio, this is the other thing I look at too as well, right? It just doesn't make sense for me, right? Because if I'm looking over here, right, if I got in now, I'm risking 260 pips for 115 pips. So I'm risking 260 to get 115. I'm risking way more than what the. Then I'm risking 70 pips for 115. That makes better sense, right? So I put my stop loss here, but if I'm going to do that, I really got to believe in that stop loss. I really believe that it's significant, that's a significant mark, that price is not going to retrace back past that. I just don't know that I believe that, because here we're coming up on this support / resistance, and price could bounce off of that and start back up again. So For me, this is more one of those things that I would kind of sit out and wait. I think there's better trades out there, and I think that what we should be doing is looking for the better trades and not trying to force some trades that may or may not be in our best interest, right? So that's it on the Great Britain pound pairs. Let's look at what I was saying earlier, which was the Aussie dollar and the Canadian dollar, right? So here goes a pair. Excited about this one. I like this one a lot. As you can see from that, and so last week, let me just show you what I did that was so stupid. Right? And I can share this with you because, hey, it is what it is. And this is why you can't get overexcited about a currency pair. And you really need to use caution and restraint going in, right? Because what I did is I went and I was in the assumption, probably like most, that this thing was going to continue to go down, right? Because look, we had a huge downward trend, right? This thing is going down on the daily, right? Going down, 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 right? And I'm thinking to myself, okay, wow, this thing's going down, so I'm gonna get in on this. I'm gonna short this joker too, right? Plain and simple. The problem was, for me was, excuse me, was that when I was trying to short this one, because I'm looking at it, I was like, okay, great, it's downward trend on the daily, downward trend on the hourly, thing just dropped, okay, this gotta be it, right? This is a no-brainer, right? We get back in here and it's gonna pull up a little bit, but then after it pulls up a little bit, it should go ahead and continue to drop back down, right? Fine, perfect. Be easy money, easy peasy money. Well, nothing is ever as easy as you want it to be, right? Come in here, drew the fibs, boom, looked at it, looks like it was gonna go back down. It kept going up. It kept going up. It kept going up. It hit my stop loss, and it kept going up, and it kept going up. Right. So it didn't go down. In fact, what happens? It wound up breaking the downward trend line on the hour, and it looks like it's going to continue to go up, possibly. Right. What could I have done better for this trade? So that way I wouldn't have lost money on this trade. Patience, right? I was impatient on this one, and once again, this is kind of that bias that I was talking about. I saw what I wanted to see on this trade, right? Which I saw hourly, daily, everything was going down, so I knew it was going down, and so instead of waiting like I normally would for certain things to occur, I went ahead and I jumped the gun, right? Because I know that when I go in, I'm looking for something to trade on a downward, that it needs to cross over my downward trend line, right? It needs to cross over the trend line. It needs to break through here and start going down, right? And it never happened. Well, it kind of sort of happened because I put this one here, right? It's not showing it right now, but I really did what I thought I could do to see this in a light that was favorable for me. Yeah, I think I drew it like this. Yeah, and I saw that one. I was like, okay, great, I'm in. This is it. That's what I did. I drew this from going up here. And I said, okay, it's crossed over. It's red. That means I can get in now. I'm going in. It's pretty steep downward trend. I'm getting in. And I was wrong. Price kept going up. Right? couple things. Price makes a big move like that. Don't just jump into it right away. Take some time. Watch what price is going to do. Um, and just kind of get out of and get out of this way. You know, go with the momentum of the trade. Right? Don't go with what you're anticipating. Okay, this is what's got me in trouble before in the past, and I'm pretty sure it's gotten other people in trouble as well. Which is you're anticipating that something's going to happen, and your anticipation really leads to nothing at all, right? And that's not what you want, right? Um, the price action will happen, right? It just may take it a while for it to occur, right? So anyway, with this particular pair here, let me get this right here out of the way. Boom, boom, boom. With this particular pair here, all right, price has crossed over into the buy side. All right, so if we're anticipating on buying on this one right here, now would be actually a good time to do so. I'm not gonna say actually now, but what I mean by that is I'm saying now's a good opportunity to look for buying positions in here, right? Buying opportunities, right? Because what's gonna happen is price should be pulling back at some point, right? And once price pulls back, that's when we're gonna be looking for buying opportunities. Now, if you look right here, you know, some people say, well, you know, you could probably try to draw a little trend line. I wouldn't, because I think that's just cheating, and that's what happened last time, trying to cheat, cut corners, and wind up getting cut off. I think the Aussie dollar is good enough to stand on its own. I think what's going to happen over the next couple of days, get some news come out, people get cautious, maybe pull back, and then once they pull back, something favorable comes out, hopefully, and we push through. If nothing favorable comes out, then of course it's going to push back down, and then it's going to be back on the sell side of this trend line, and then we'll look for selling opportunities. But once again, if price pulls back and then something positive comes out, then we're going to look for buying opportunities. And right now, this is the idea extension, right? So it's a good opportunity for this particular pair right here. I think it's a good opportunity in the market overall. I think we're just going to have to, you know, look for those opportunities here and there. Okay. Let me see something here. I think something having some issues. I think I have some technical issues. Wait 1 minute. Okay. Maybe not. Let's see here. Trying to make sure. Okay. All right. So make sure we're okay. Good deal. Where was I? Oh yeah. So yeah, so just be cautious with this particular pair. I think over the next couple of days, definitely can see something good for this one. And like I said, we lost money last week on this particular pair. The goal will be to try to recoup that back this coming up week here, right? And before we get out of here, let's look at the U.S. dollar, Canadian dollar. This is a pretty cool pair. I made money. I made a good bit of money off of this right here over the last couple of years, trading these pairs. So here's the AB, right? Essential C. D extension is it's completed the D extension for this particular pair right here on the hour chart. And so now what we'd be looking for would be the next A or the next B rather, because the A is going to be here, um, or here rather, up here somewhere, and then the C, B, and then C should be somewhere over here. So we got to figure that out. And has not shown itself as of yet. Now you notice once again over here on the daily chart, right? A, B, C is coming down here somewhere, right? It's coming up on this trend line. So right here on this trend line, there's a high probability this thing could be bouncing right here, right? And if that's bouncing right there, then that would be great because the D extension is up here. Which, how likely would that be? Because that would be a 39. Yeah, that'd be a multi-year high because it hasn't hit that high, that level since 2016, right? It's possible, but you know, it's not one of the things I hold my breath on. It's possible, but it hasn't hit that level since 2016. But it definitely could hit that. And essentially, what it needs to do it would be a positive. Oops. Some positive momentum in the market, and you can see something really special here, and that'll be good. So we'll see. And I think once again, I think a lot of this is going to have to do what's going to come out of the the China U.S. Tariff agreement, because if we can supercharge that economy, I mean, if we're agreeing and we're getting the right price for goods and services coming over here, and for the goods and services that we're trading over there, definitely can help supercharge the economy. Definitely is going to help put added value. The other thing is though, with the U.S. dollar right now, because the Fed is slightly being a little bit more cautious as far as with the or dovish rather, with interest rate increases. So it looks like we're probably not going to have as many interest rate increases this year as we had initially anticipated. It's kind of made the U.S. dollar fall in value a little or a lot rather. So pairing up with some of these other currencies, you may see that turnaround in some of these other currency pairs. But I think there's going to be a lot of things that's coming out over the next couple of weeks that may give us some short-term directional bias. I think the overall long-term directional bias, though, is going to be kind of a weaker U.S. dollar, but we'll see how it is going to go for it. Still compared to some of the other currency pairs out there as far as the interest rate that you're getting on the dollar versus these other pairs, you get more on the dollar. So, I don't know. We'll see. So, but anyway, for this trade right here, this particular trade right here, how would we trade this? I would excuse me. I'd be cautious with this one. I stay out of it for the moment. Wouldn't try to be in it today. I'll probably wait another 24, 48 hours, pretty much for all of these pairs. This one right here, the Australian dollar, and definitely anything with the Great Britain pound, 24 to 48 hours at least minimum, to see what's going to happen with these pairs, see what direction they're going before we make any type of commitment to them. Just because I think that I haven't seen a buying signal come in yet. This particular pair right here, I haven't even seen like the next ABC sequence. I haven't even seen the next AB. Well, we'll see the A. We don't know where the next B is at on this one here, so it's definitely too early to get into this pair. If anything, this pair might actually be getting ready to rebound, right, and then push higher. So that's something to definitely look out for. So I'd definitely be cautious with this one right here. All right. It looks like there's a potential to make some good money if it is going to. I mean, if we are looking at, let's see here. Yeah, 640 pips. So over 640 pips to be made. This particular pair, I mean, that's freaking outstanding. That's a standard account. That's $6,400. Mini account 640, and micro $6.40. Either way it goes, money being made. You're risking 235 pips, which once again, I would do that. I don't like to risk that many pips on anything. Um, but when you look at it in the sense that, hey, I'm risking 224 pips to get 600 pips, that's almost a 3-to-1 risk to reward ratio. That makes sense, right? To be in those type trades. And if you want to make money in the markets, those type trades you're gonna have to take. And if you can't afford to do it on a standard lot because you're saying, well, I can't risk $2,000 to get $6,000, I just don't have that in my account, then maybe try it on a mini lot. Maybe you're willing to risk 200 to get 600, or maybe you just want to break it up where you put, you do a fractional. So it's not quite a micro, but it's not a mini, you know, and you're just trading enough to be able to, you kind of pyramid into the trade, so that way you're not initially risking that much, but as the price starts to move up in your direction, you risk a little bit more, a little bit more, a little bit more, and essentially you get more than you would if you just trade a straight mini account, but you're risking less than you would if you traded a standard account or a mini account. So anyway, that's pretty much it for me. I am about to get out of here, and I will talk to you guys in about another 23 hours. Hope you've got some good information from this today, Mr. Mr. Zero Fear. Hopefully you're going to be making a ton of money today on the markets, or at least this week. If you guys got any questions, please feel free to hit me up at ForexTapMagazine@gmail.com, or you can hit me up at questions@ForexTapMagazine.com. Either way it go, I'll get to it and try to answer any and all questions that you have within at least 24 hours of you sending it to me. I'll try. Don't hold me to that. Okay, I'll try. Anyway, guys, take care. God bless, and I hope to see you soon.